Hi, this is Zak Mir with a crack of dawn edition of the Bulletin Board Heroes here at Zaks Traders Cafe. It is Thursday, the 13th of March. Not really crack of dawn, it's around 5 to 9, but that's crack of dawn for the Bulletin Board Heroes. Starting off with the FTSE, where the old January support there around 84.60. We've managed to bounce above that in a sort of holding pattern, just under a rising 50-day line, which is encouraging. Want to see an end-of-day close above that at around 85.75. to give us a chance of heading up to that broken January support line, 87.20. RSI around 40, so neither here nor there in terms of giving us a steer on the next move in the market. Next up is the DAX, and performed rather well, I suppose, of late, given the lay of the land with tariffs, etc., but floored the channel there from back in November around 22,200. Risk of a move down to the 50-day line, 21,700, but ideally we stay within that channel and above 22,200, which I'm struggling to say. Top of the range and top of the channel there towards 23,500. RSI still above neutral 50, which is encouraging and gives us the hint that we will stay within that channel. So any dips towards the price channel for a potential buy opportunity. Moving on to the situation at the Dow, which has been the problem child amongst the major indices, are now well below that 200-day line. We weren't below that, or hadn't been below that since the autumn of 2023. The situation now is that while we're below the 200-day moving average of 41,900, we've got the risk of a fresh leg down to September support at 40,000, which would be rather painful. The positive, though, is that the RSI is now below the oversold 30 level, and historically, at least in the recent past, especially last April, a dip to that level has been a buy point. In fact, the buy point in April, a very good one, and the one in December actually also not a bad one either. Moving on to Bitcoin, where it's all about whether this market can hold above or hold the current lows just below 80,000. We had a bear trap rebound, but now hugging the 200-day moving average at 83,500. That leaves us within the channel there, which is based at around 80,000. And the old support, the broken support, at 90,000. So hoping that the latest bullish divergence there with a lower low but higher RSI trace will give us at least another attempt on the 90,000 zone. Below the latest support there, so around 76,600, there's the risk of the old resistance, March-November resistance, towards 73,000, but we're not expecting anything worse than that if we get that at all. Moving on to gold, and here looking rather more perky. We found our neckline support there at 28.90, and above that looking for the top of the channel there as high as 30.40 or even 30.50, 3,050 by the end of next month. Shifting the time frame along a little bit, we were looking for that by the end of this month before, but RSI 50 rebound encouraging, and that's what we're going for at the moment in terms of a leading indicator to the upside. Moving on to DFS, which I don't think mentioned any sale at all in its latest update to date. Rising trend channel there from back at the end of 2023, top of the channel there around the £1.60 mark, and the reason for inclusion today is because we've gapped up today and we gapped down at the end of last month. So it's a bear trap island reversal to a new low, and that's normally a reliable signal. So looking for £1.60 at least while we're above the 50-day line at £1.36. You could probably tighten it up to £1.40, the top of the gap down that we had at the end of last month. RSI is pushed up above neutral 50 as well, which is a help. On to ImmuPharma, which has been on the back foot of late, but gapped up today, and there's a line of resistance basically from January around the 4.4 pence level. Need to see an end of day close above that to give us or give ImmuPharma a chance of retesting the glories of back in January. RSI pushing through neutral 50, which gives us a hint that at least we'll have an attempt on last month's resistance at 5 pence. Upside valid and the rally valid while we hold above the floor of the gap there at 3.5 pence. Moving on to a stock from yesterday, which was and is Jersey. Here you can see that we had that sharply rising 50-day moving average, lots of blue candles or clear candles gap close buy signal, so sort of three different things pushing together there. Initial target here, 82 pence, and looking for up to 102 by the end of next month, if we can get a clean push through that 200-day line, which we are currently doing at the moment. LMS doesn't normally make an appearance here, but thought after the second gap higher, and it is a bear trap island reversal, we have a chance of a move up towards the upper 20s while we're above the 20 pence level. Not much of a trade there, but double bounce for the RSI on neutral 50, and it looks as though we're going into a golden cross as well, so maybe the upper 20s will be the minimum on the upside. Oxford Biodynamics, I think, delivered some news today as well. Here we've got potential of a broadening triangle base. Lots, obviously, still looks rather heavy, but the initial goal here is to get above the 50-day line at 0.61, and after that we could then perhaps retest last month's resistance towards 0.8 pence. But it looks as though still we have a selling into strength, which is maybe understandable after the recent large placing. Moving on to Phoenix Copper, where there's still no news, and but the share's holding relatively firm after the push that we had from under 3p, bouncing off the 50-day line, which is encouraging, and above that, around, well, at least above the 4 pence level. We're still looking for 8 pence by the end of next month. Finishing off with another alumnus of yesterday, which is Tungsten West. Here, the idea was, or the idea still is actually, that weak hands sold into that spike, and now that they're probably out after the push below 3.5 pence, the shares can actually go up again, and they are doing that. Top of the range and top of the channel there, 8 pence, which we were looking for by the end of this month, while we remain above the 4 pence level on an end of day close basis. That's it from me today. More updates tomorrow.